Hey, what's going on YouTube, and welcome back to the channel. My name is Jordan Brown, your Austin area realtor. And you know, September had a lot of people talking about rate drops. You see it on the news, you're hearing realtors talk about it, but what does it actually mean? There's a lot of confusion and misinformation out there. I'm here to make important distinctions between Fed rates and mortgage rates for you here in this video today. So first and foremost, what actually got cut in September was the Fed rate. I know you've seen that, and most people are out there going, this means mortgage rates are going to fall. Now, while they may be somewhat indirectly connected and more of like a sympathy play off of each other, the Federal Reserve, also known as the Fed, controls Fed rates. They do not control mortgage rates. So what is the federal funds rate? The federal funds rate is the interest rate at which banks lend to each other overnight. This rate influences the overall cost of borrowing for banks and is a tool the Fed uses to manage inflation and overall economic growth. The Fed rate is short term, and its influence, it fluctuates. It's influenced by the decisions of monetary policy that the Fed puts in place. So what are mortgage rates? Mortgage rates are the interest rates that lenders charge their borrowers for borrowing money. These rates are longer term. They're more like 15 to 30-year loans, and they're influenced by a completely different set of criteria. So first, yes, the Fed rate does influence mortgage rates, but they are not directly tied. That does not mean that when the Fed cuts the rate, there's an instant reaction within the market. In fact, if you watch what happened in September, as soon as the Fed rate got announced that it was going to be cut, mortgage rates actually went up a little bit. That's because these lenders had already factored in a 50 basis point drop in the market rates at that time. Your mortgage rates had already considered and decided that there was going to be a 50 basis point drop in the Fed rate. So if you were sitting there thinking, oh, well, the Fed announced that they're dropping rates today, therefore my mortgage should go down, or the interest rates that they're charging should be going down immediately afterwards. That's not true. And I'll be sure to link an explanation for that, of what happened that day, in the description below. Other factors that influence your mortgage rate or the going interest rate is going to be your market forces, your economic factors, supply and demand for mortgages, inflation and overall market conditions, and lender risk premiums. This means like, what's the credit worthiness of your borrower? What type of mortgage are they getting? All of this equates to what your lender is charging for a mortgage rate. Let's summarize those three key differences. Number one is direct control. The Fed directly controls the Fed rate, but mortgage rates are determined by private lenders and widely influenced by other economic factors. The second difference is their duration. Fed rates, they're more of a short-term thing. The transaction is very short. Versus mortgage rates, you're talking about 15 to 30-year mortgages. And number three is the correlation they have on each other. When the Fed raises or lowers the federal funds rate, it indirectly impacts mortgage rates. Mortgage rates may rise when the Fed increases rates. However, they can move independently based on global economic conditions, investor sentiment, and other factors. Jordan, make it all make sense in one sentence. While both rates may affect borrowing costs, mortgage rates tend to respond to, but are not directly tied to, the Fed rate. I hope this cleared up any confusion about what the two may have to do with each other. And next time that you see the news where they're talking about the Fed cutting rates or maybe future rate cuts, you know what that could be. In fact, I suggest that you talk with a local lender and or a realtor who is in the know. Believe me, I've seen it plenty of places where realtors have no idea what they're talking about. They heard the news that the Fed cut rates 50 basis points, and I saw someone say, another realtor say that meant that they were cutting mortgage rates 0.5%. Completely bogus. That's not true. So make sure you're working with someone who is in the know. And if you're in the Central Texas area and you want a realtor looking out for your interest, I help people buy and sell in Central Texas every single month. I'd love to be your realtor. My contact information is in the description below. Thank you all so much for watching, and I'll catch you in the next one.